I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market rebounded last week as fears of recession increased, sending commodities sharply to the downside. That gave relief to the inflationary backdrop. Over the past couple of weeks, and I was off last week, in line with these reversals, interest rates declined as investors moved money back into bonds and stopped selling stocks. Now, the last 3 days here of this week, we've seen rates moving back to the upside, but we don't really think that that will last. And while these bounces in stocks were not huge, you could see each day as dips in the indexes came, they brought buyers, and there is a short-term tone change. In the background driving this improved investor sentiment was the FOMC minutes. They said that growth was skewed to the downside, so they're looking at the slowdown coming, but they still see inflation as an issue. But that was before the big drop in commodities over the last couple of weeks. So maybe they're only looking at a 50 basis point increase, and that's giving a little optimism to investors. Goldman said the world is on the brink of a severe recession, and they put the odds of a recession in Europe and the UK up to now to 45%. Commodities really collapsed as we saw gold, metals, grains move down sharply. Oil, in fact, down 8% one day, and then rebounded some. But overall, the oil scenario is not great. It was really the worst half ever for the 60-40 investors. You might have seen that report that showed that that asset allocation lost 16.1% for the first half. Now, comparatively, when you look at what the next worst year was for the first half for that allocation balance, that was 2008 during the huge mortgage bubble crisis. That came in second, and that was 6.7% to the downside. Now, this is very strange, of course, to most investors because they know if they're long stocks and the stock market plunges, the bond market usually goes up. But as we said, coming into the beginning of this year, we thought that the bond market would move down and it would lead the stock market down, and that has proven to be accurate. Well, now after that big decline in both stocks and bonds together, some bargain hunting has come in, and investors, after getting crushed, and those markets getting crushed, well, that really is expected. So just some buying coming in based on what looks like favorable pricing. And then China came out, and they said Thursday that they're talking about some big stimulus in the market. And that also gave investors a bit of a lift. Friday, the market stalled on the very strong payroll numbers and the very sad news out of Japan that Abe had been assassinated. And we were big critics of Abenomics and believing that what they did there in Japan was horrible for that country, and maybe the taking the lead in invasive governments, more invasive than almost any other government there. And Abe led that, and I just absolutely, it's horrible to see what has happened to him today. That's really an aside from the fact that I think that his policies really have led Japan and the world into a lot of trouble, but really sad news about that. So our analysis had warned, that the bond market would lead the stock market down. And that's back to these old ways. Is in the 70s and 80s, we always looked at the markets that way. Bonds moving down, as traders, we would see the stock market moving down. Bonds moving up, the stock market moving up. And now we have that positive linkage again, which is likely to continue, at least for a while. As a drop in inflationary expectations leads yields to the downside, so that could lend support to stocks. However, we'll soon see the truth of earnings, which are no longer supported by the Fed fairy dust, and we expect to see some pretty poor guidance and weak margins overall. While stocks are forward-looking, and the expectation is that the bear will end, and we're reading a lot about that, the thought is that the Fed right now might back off a little bit. Normalization is a long way off, and it's very likely to see the interest rates moving up for quite a long period of time. If the Fed does stop at some point here towards the end of the year, which we think will happen, it's not likely to be cutting rates anytime soon because they want to get to that place of normalization. The current rebound that we have in the stock market may get its legs cut off pretty soon. I'll show you those levels, those important levels, as we get to the end of the show. Right now, the market's having a nice bounce, as it's done many times. There's more, but the bear market is far from over. Major indexes for the week, well, they had some good gains. The SPX, the S&P 500, and the Russell gains up close to 2%, 1.75%, 2%, though the NASDAQ, which does do better as interest rates decline generally, was up 4%. So a good move for those tech stocks. Bond market 30's down about 2.5 points. That's reversing a very big up week from the previous week. And the 10-year yields popped 20 basis points. But we think that the yields are going to be moving down again. We showed that in Future Speak on Wednesday. We'll be reviewing that again in Future Speak coming up this Wednesday. Gold market plunged. It was down about $75. Silver down about 68 cents. And we had talked about this period in July as the capitulation stage, and that the period after August 1st was likely to be better for the rest of the year for gold, silver, and all of the metals. So they're all in a very, very weak stage right now, and we talked about that, and that this would be the time to be accumulating slowly if you are a longer-term holder, and just as I have said I'm doing. The dollar up about 1.75%. It made a high of 107.78, and it's in some thick resistance that we had talked about before. However, the euro currency has broken down. It is a really bad pattern, and that will lend support for the dollar, which we would not think could get a decline of any consequence now. Just maybe some minor pullback, as we said, the risks have gone up for recession in the eurozone, and the eurozone itself is always in question as the whole concept of that eurozone is certainly experimental. Oil down 350, and that bounced off the low. There's resistance in the 106 to 109 area, and our target, which we will show again in Future Speak this week, and you really need to watch that show to see us look at 24, 25 different futures contracts. Our target for the downside in oil in the coming intermediate term is around $93. So there could be some trade setting up, and you really want to pay attention to our trade setups and the analysis that we offer all of the time to look for that best opportunity. Coming up, Ari's going to show you a bullish setup in the bond market, looking at ZN. Katie is going to show you a bearish setup in Nike. And then Matt is going to show you a special that we're offering on level 4. You really want to watch that. I'll go into the stock market analysis. I'm going to look at the short term of the S&P 500. And I'm also going to give you a peek at our Futures Hub, which is where you can see all of this amazing futures analysis basically on one page. Just absolutely crazy good. So take a look at that. I think you will Enjoy it. Okay, make sure that you do go to our website at askSlim.com and explore, look around. If you're new, you could become a free member and you'll be notified of certain things that we post. Of course, we always have specials for first-time members. And on YouTube, please do subscribe to the channel. Make sure you give us a thumbs up. That does help us. Click the notification bell if you want to know when we put things out there on YouTube, which we do quite a number of times each week. And that thumbs up, this does help us with the algorithms at YouTube. On Twitter, follow us at askSlim. And again, for membership information and questions on our huge offerings of education and analysis, write to Matt at askSlim.com. This is multiple time frame analysis on the bond market. RV is looking at ZNs, which are the notes, and he's going to show you a coming bullish setup in the note market and essentially in the treasuries as a whole. He's got some great analysis here for you, and I think you're going to learn a lot about our style of cycle analysis watching. Great lessons that RV gives. Take a peek.
So let's go ahead and shift over to the notes. That's forward slash ZN. Again, what we've done here is there was a 66 bar cycle that we were looking at on the chart. We basically just shortened them slightly to a 63-week dominant, which is then broken up into minor 21-week cycles. And you can see a very clear upturn here in the forward slash ZN as we are getting into this rising phase on this longer cycle here, which is the 63-week, as well as this minor cycle here, which is the 21-week cycle. And we have this nice upturn now in the weekly momentum, which is confirming that we are in a rising phase in the forward slash ZN. Reasonable to get up to the 122.13 area here, which is the dominant 38.2. That's our overall target here for the notes. If we shift over to the daily, so we highlighted the possibility for likely a little bit higher in the notes and conversely a little bit lower in the rates, and then look for a sell-off here in the futures and a pop back to the upside in the rates market. This sell-off is likely going to create a flag, and then we will be looking to put on a long side trade idea here for our members as we get out into that next rising phase. Now, that next low is due right around the later part of July. So in the to the 3rd to 4th week of July is when we'll be looking for a opportunity to get long for a trade idea in the notes. Because we have now a positive ribbon. We have gotten very close to that prior daily cycle high at 120.19, and that's really some of the evidence really favors a bullish bias here in the notes, and really one of the most interesting opportunities as we look across all of these markets.
All right, great job on that, RV. And yes, coming up is likely an opportunity in the bond market on the long side. Great work. This is multiple time frame analysis on Nike. Katie is going to give you some great lessons here on cycle analysis. Also, just as RV did in that previous segment, she is one of the great experts in the world on cycle analysis and is also leading our new effort in option trading and teaching that in our Discord channel. So if you want to see Katie put together all of our analysis and look at option opportunities, you're going to want to watch that. So take over, Katie, and show them this great analysis on Nike.
Hi, I'm Katie with askSlim. The Cycle Low Timing Tracker on your screen is one of our tools here at askSlim that helps our members identify opportunities in the symbols on our focus list that may be setting up around coming into and out of cycle bottoms. We use this tool in conjunction with looking at the charts to evaluate the opportunity and the timing. The symbol we're going to take a look at today is Nike. Nike is found in 3 places on the cycle low timing tracker. It's found here in the cycle timing period of risk box for the daily time frame. And what that means is that we're in a period of time on the daily chart when we expect one cycle to make its low and for Nike to move up into the rising phase of a new cycle. Nike is also found in the bottom pending box for the daily time frame, and that means that there's been sufficient positive price action to suggest that Nike is in fact making that cycle low that we're looking for. Now that doesn't necessarily mean a bullish trade setup. These 2 small red squares next to the Nike symbol are indicating that momentum is negative in both the intermediate and short term. Finally, the other place that Nike is found on here is down in this in sync box. Now the symbols in this box are ones that are currently in cycles on the daily chart that are ending within a period of time when we expect the weekly cycle to make its low. Generally speaking, because of that, those symbols are expected to show weakness and maybe even breakdowns in their current daily cycles as we move into the bottoming phase on the weekly chart. Switching over to a 5-year weekly chart of Nike, I'll show you how this all fits together. We have 21 bar cycle brackets on the bottom that represent the average cycle length of money flows into and out of Nike, and the actual cycles are outlined in black around the candlesticks. These purple vertical lines show where the actual cycle lows occurred, and the blue vertical dashed lines over here on the right show a period of time around the current cycle trough when we expect Nike to make its current cycle low. In this particular case, that's between July 25th and September 9th. Now we have these negative cycle structures going on in Nike. We have left-hand translations. That means that the cycle peaks way over here close to the beginning of the cycle, leaving the rest of the cycle for a decline. Now that often leads to negative configurations, which is when the cycle ends lower than where it began. That happened in the last cycle, and this one is showing the same structure. A momentum in here is negative, as indicated by our proprietary reversal scout. So we have negative cycle structure, negative momentum, and late declining phase of this cycle going into the cycle timing window. Our next level on the downside is this intermediate 78.6% fib extension at $90.85. Switching over to the daily chart of Nike, this has an overall bearish look, bearish cycle structures with negative configurations and left-hand translations. The situation right here is why we find Nike on the cycle low timing tracker. These blue vertical dashed lines are showing the period of time around the ideal cycle trough when we expect the current cycle to form a low and begin to move up into the rising phase of the next cycle. We are currently in that window. Also, Nike is exhibiting some positive price action that was able to trigger the bottom pending algorithm. Therefore, it's found in the bottom pending box on the tracker. Finally, it was in the in sync box. Switching back to the weekly chart, this timing window when we expect the current intermediate term cycle to end is between July 25th and September 9th. Now on the daily chart, this next cycle ends on or about August 28th. So this daily cycle fits within that weekly cycle timing window. Because it syncs up, we are anticipating weakness and possibly further breakdowns in this next cycle as we form that intermediate term low. So because of that, we would consider it a good short side setup if Nike were able to get into this resistance zone between 108.81 on the bottom up to about 114.5. To learn more about the Cycle Low Timing Tracker and our other tools and services, please visit our website at askSlim.com.
Beautiful work, Katie. Just really good. And again, I want to remind you to become a level 3 member, and you'll be able to see Katie teaching around putting cycle analysis together with option trading. This is our level 4 special membership. Matt is going to go through this incredible content and services for trading and for investing. Show them this great level 4 membership, Matt.
Hello, fellow traders and technical analysis enthusiasts. This is Matt with askSlim. In this brief clip, I'm going to answer a question that we're often asked. What makes level 4 your top tier membership? Well, there are 5 key benefits which are listed here. However, the biggest difference with level 4 is you get full access to our proprietary multiple time frame charts with all of our analysis and access to our proprietary indicators and studies. The askSlim method generates analysis that allows us as technicians to project in time, price, and direction. These technical details are critical to be able to confidently execute your trade planning and overall trading success. Our charts are precisely designed to support your trade planning. With a level 4 membership, you can import, save, and view our multiple time frame analysis on our entire focus list of 84 symbols. This includes the major indexes, the most liquid top trading stocks, ETFs, and futures markets consisting of metals, energies, currencies, bonds, crypto, and more. All right, let's go have a look at some of our charts. As I mentioned, the askSlim method generates analysis that allows us as technicians to project in time, price, and direction. I'm going to open up here one of our chart grids that includes the major indexes, and I'll start with the SPX weekly chart. Our cycle analysis, which has been developed and continuously refined over the past 5 decades, is combined with momentum studies, swing high, swing low techniques, and this is all done at multiple time frames. There are no certainty when it comes to trading. The best we can do is have a methodology that can position the odds in your favor, and that's exactly what our analysis is designed to do. Here's an example of one of our stock chart grids that you'll have access to that consists of our weekly and daily chart analysis for Apple, AMAT, AMD, Amgen, Amazon, AVGO, Boeing, and BABA. To view the chart analysis for each one of the time frames on each symbol, you simply maximize the cell. Then you can scroll through and see each chart at the various time frames, as you see here with AMAT's weekly chart, AMAT's daily chart, AMD's weekly chart, AMD's daily chart. This is the experience you'll have with all of our chart grids. Furthermore, you'll have access to all of our pre-established chart grids that serve those of you with short-term trading styles. Whether it's a few days, few weeks, or intraday, we have chart grids ready to assist your trade planning. Specifically for stock indexes, if you're a day trader, we have a proprietary stock index grid that we email out each morning that our level 4 members have direct access to. It's this one here, which I have demoed many times in the past. Additionally, if you're a short-term trader, we have a multi-time frame grid, which you will have access to that you can open on your own thinkorswim platform, and you can plug in any symbol of your choice that's in the TOS library. So if I plugged in deer here, you're going to see how our indicators respond at a glance on any symbol of your choice. So if you're serious about technical analysis and improving the efficiency and effectiveness of your trade planning, an askSlim level 4 membership is as good as it gets. Currently, we have a special for level 4. It is a 3-month trial offer where you have 35% off for $303.75, which breaks down to $101.25 per month versus a regular price of $159. If you're interested, write to Matt at askSlim, and we look forward to hearing from you soon, and all the best.
All right, that's terrific. And I'm going to show a little bit more of what's included in this membership as we get into the stock market analysis. All right, this is my S&P 500 analysis. I'm going to do a 1 to 3 week view. And I want to show you the futures hub first so you can get an idea. The reason for that is because, well, I was on vacation last week, so I didn't show any analysis. And, of course, got a ton of emails. What happened to market week? Where was your S&P 500 analysis? And you don't have to miss it when I'm off. And if I don't show exactly what you want to see in the S&P 500 analysis or in the indexes or in any of the 24 different futures contracts that we offer analysis on. I'm going to show you our futures hub, and you'll be able to see how you could get that analysis. This is basically a single page that has all of our analysis in there. You can see that we do analysis on the indexes, the treasuries, currencies, metals, energies, green, softs, and crypto. And the colors of these, which you can see the indexes are all red, is the sum of the evidence, really looking at our directional bias, which is putting together 3 different time frames and all of our individual proprietary studies. And you can see in here that, the indexes are essentially negative and rallies should fail. And looking at here, the TNX yields are negative. So in other words, bonds are positive, and you can see that right in here. And the currency market, you can see the dollar is strong right there. The dollar against the yen is strong. It's green. And what these other currencies look at, the metals, gold and silver, on the neutral side, and that's because of stronger conditions in the longer term. Platinum and copper are negative. Energies, you can see the conditions there, the grains and soft, and crypto, which we think are going to have another big hit to the downside. Just so you can get a peek of what this looks like, I'm going to give you the S&P 500 analysis. But if you click on that, you can see you can get the weekly chart right over here, and you can actually blow that up. I'll view it larger, as you see right over there, and you can see what our weekly analysis looks like looking at that. Sorry, lost that there. This you can see is the weekly chart. This you can see is the daily chart. Here's our video analysis, so you can just go directly to the Future Speak where that is and watch just that segment right over there. Here's all of our technical details in there. You can see the directional bias is very bearish. The key low dates in the daily and weekly, the very key levels right in here. And all of the notes that I put up get put in here so you can see everything that I'm saying about the market. So this is just a fantastic thing on the Futures Hub with all of these futures that I think are followed by so many thousands of people that are in here. So, oh man, look at all this news popping up. All right, so I just wanted to give you a peek there at our Futures Hub. Let's take a look here at the S&P 500. So this is the analysis on the S&P 500 daily, and the relief rally is really here, and we want to look at where the resistances are and what is likely to happen, looking at the daily chart on SPX. So that switched over to ZB. Let's move this to SPX. And you can see in here the cycle analysis. So for those of you that are new, we'll just blow out. You can see these 4 cycles we're looking at on the bottom. So this is the dominant cycle right in here. We're showing what the harmonics are right in here. Cycle analysis is like music, really, and that's why we refer to it as harmonics. And we're looking at 11 and 33-day cycles. And you can see right in here this dominant cycle right in here and how that's reflected in the charts right there, and the minor cycles that come right in here. Now, the charts, this is not analysis that says, okay, we're following some lines, and that's what the chart analysis is. This is actually energetic movement. It's money flows that we look for in here that has important information. And when you get a rally that peaks on the left side, that's called the left-hand translation, and the odds are pretty high it's going to decline through that time frame. The yellow area are the greatest periods of risk, as you see right in here, and that decline when 2 cycles are nesting, the same thing here and over here, and that same period comes out over here into late July and early August. So what we're looking at is the minor cycle, which made a little bottom here, and then we got a rally. Let's just look at these last couple of cycles right here and get a little closer peek. And you can see right here, this is into the resistance zone again. It rallied and then completed the minor cycle, hit the minor support, and then moved up again. And these resistance areas are going to be very tough. Because of this negative flow right over here of money, it says that the next one will likely be also a negative cycle. So what we're looking for is at some point the break over here of 36.36, and likely this area of resistance. This is around 3900. The middle of it right over here is around 39.77, and the top of that zone right over there is around 40.50. So if you look right in the middle there, that's 39.72. That would be a reasonable place, or close to 400 on the SPY, where it would be likely that the market would rally to. Now there has been some improvement in here, and that is, you can see in here, this is the slim ribbon PO, and when you get these negative signals, it gives you a situation where it's likely to keep declining. It neutralized in here and then got negative again, and now it neutralized again. So for some period of time, we would expect it to try to get up in here, but the longer term conditions in the intermediate or weekly charts are negative, and that's why when I showed the futures hub, you see the directional information as red. And that some of the evidence does say that the market is likely to fail again. So we would look for the minor cycle to come up somewhere in here to the middle of resistance, getting up somewhere near the 4,000 area, then coming down again, maybe trying to rally again, and then this yellow area being a significant period of risk, where we're looking for a decline that could easily take it down to the 3,500 level, and on the weekly chart it shows as low as the 3,200 level. So there is a good possibility over these next number of weeks that the market is able to get a little more traction on the upside, and then gets into a much bigger downside force that was putting together the weekly and the daily into a nested area that comes out over here into late July to early August, and that is likely the time period we will see a very significant low for the stock market, maybe the low for the year at that time, because we think that the fourth quarter will be a better quarter for the stock market, with then potentially a lot of risk out into next year. So for now, the market has done its damage. The market fell very sharply, of course, and now we're in a period of a rebound and slightly improved short-term conditions, which should get you up to somewhere close to the 4,000 level on the S&P 500. Now, one little caveat in there, and that is that if you get below that last low right over here, which is approximately 37.39 in the S&P 500, that will tell you that this cycle has already turned down and that a lot of risk exists down there. If for some unknown reason the market gets its legs and gets above the 4168 area, 4166, that is the upside reevaluation level. So through there, the market gives you a much more bullish scenario, 4166. I do not expect that. Underneath that low right over there at 37.39, it gives you a resumption of the negative conditions, and likely that the market is moving down very sharply at that point. So that's a look at the S&P 500. I hope you found that to be very, very valuable information for your trading and your investing. The relief rally is here, but the risks remain high. Please do go to askSlim.com and explore and share everything that we have in there. The special that Matt offered, I want you to go, if you haven't seen it, go watch that. Because if you're just watching the YouTube clip here on the S&P 500, you've missed a great offer on our level 4. And make sure that you go back and watch the analysis that Arvi and Katie did on Nike and the bond market. Just a great analysis that's in there. That futures hub that I showed in the beginning of this segment, you can get that as a level 3 or 4 member. Please do subscribe to this channel, click that notification bell, and liking that video really helps us with YouTube. Watch our member videos in the playlists and our past shows. On Twitter, follow us at askSlim. And for any information on our content, offerings, and education of analysis, write to Matt at askSlim.com. That's it. I hope you found the show to be incredibly illuminating. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city